whether we have to borrow from the outsiders or whether we are in a condition to give the credit worthiness to the customers. So such type of decisions can be taken by studying each and every aspect of financial statement. You are going to take all the current liabilities, then you are going to compare with that of previous year as well as current year. So that grouping is called as what? Analysis. Whether my company is in a position to give credit or to borrow credit from the outsiders. So in which condition my business is. So significance for the creditors. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram PU College, the Temple of Excellence, Mysuru. My dear students, today we are in the chapter 4 of your part B syllabus, that is analysis of financial statement. So this is from book 2, that is part B, and the chapter is chapter 4, analysis of financial statements of a company. So in your chapter 3, you have learnt about financial statement. Okay. So once again recall, what is this financial statement? Financial statements. So we are speaking about financial statement of a company. So when it is prepared, normally at the end of the financial year. So what are the statements to be prepared? Statement of profit and loss as well as balance sheet. So in this chapter, so it is a continuation of your financial statement of a company, that is your chapter 3. So under analysis of financial statement, so you are going to learn how or what is the necessity to analyze the financial statement or how to analyze the financial statement. So before that, we shall see what is the meaning of analysis of financial statement. So to be simple, analysis means what? You are going to study about your financial statement. So under analysis, you are going to know about each and every aspect of your financial statement in detail. So you are going to compare from one year to that of another year, so that you will come to know whether the particular item of the financial statement have been increased or decreased. For example, you can compare the current assets of previous year as well as current year. So thereby, you will come to know what is the variation in increase or decrease in current asset. In the same way, each and every item of the financial statement are discussed in detail or studied in detail, so that we will come to know so what is the variation from the previous year to the current year as well as to the next year. So we can estimate the current assets or current liabilities or any item of the financial statement for the next year also. So let us see what is this financial statement or analysis of financial statement. So in financial analysis, the data given in the financial statement is classified into simple groups. So what we are going to do? So we are going to take the items of the financial statement and we are going to make them into simple groups, and a comparison of various groups is made with one another to pinpoint the strong point as well as weakness of a business. So I have already told you, so you know about the financial statement, correct? Suppose this is a financial statement. You are going to group them into simple groups. Okay, so for example, let us take only current liabilities. So you are going to take all the current liabilities, then you are going to compare with that of previous year as well as current year. So that grouping is called as what? Analysis. So you are going to study in detail each and every aspect of the financial statement. So what is this financial analysis? The data given in the financial statement. Data may be your current assets, current liabilities, fixed assets, current investments, so long-term borrowings, long-term provisions. So each and every item or the data given in the financial statement is classified into simple groups. So you are going to group them. So like current liabilities all are put together. So you are going to group them into simple groups. Comparison of various group is made with one another to pinpoint the strong point as well as weakness of the business. For example, you can compare your current assets and current liabilities. Okay, so which is more, whether the current assets is more or current liability is more. So such grouping can be done as well as you can compare them with each and every item. So according to John N. Myers, financial statement analysis is largely a study of relationship among the various financial factors in a business as disclosed by a single set of statements and a study of the trends of these factors as shown in the series of statements. So what do you mean by this? So your analysis of financial statement is simple. So what you are going to do? You are going to take the financial statement of a particular year. So for example, your previous year as well as current year. Then you are going to group them into individual groups depending upon the nature. Then you are going to compare with one another so that you will come to know what is the variation or what is the trend in the financial statement. Whether the financial statement, so you can compare with each and every item of the financial statement of a single financial statement, as well as you can compare each and every item with the previous year as well as current year. So this also can happen. Okay, so that is about your financial analysis. So on the basis of above definition, so we have seen a definition. The main features of financial analysis are, so let us see what are the features. To present the complex data contained in the financial statement in simple and understandable form. So I have told you, so once the data which is there in the financial statement, we are going to group them. So by grouping, so what happens? So it can be easily understandable. So by grouping the data in the financial statement based on their nature, so we are grouping them into small groups so that it becomes simple as well as understandable. To classify the items contained in the financial statement in convenient as well as rational groups. So I have told you, so the whole items or the whole data which is there in the financial statement, so it will be grouped based upon their nature. So it will be made into small groups. So the comparison can also be easy. To make the comparisons between various groups to draw various conclusions. So I've already told you, so we are making them into groups so that each and every items can be compared with that of other items. So for example, your current assets can be compared with current liabilities. Your equity can be compared with your debt. So whether equity is more or whether the debt is more. So or you can compare the whole assets into whole liabilities. So how much is your asset and how much you have to pay to the outsiders, that is liability. So like that the comparisons can be made. So this will be the features of financial analysis. So by seeing that definition, so these are the few features of financial analysis. So the first feature is that by making this financial analysis or by following the financial analysis, so we can get the financial statements in a simple as well as understandable manner. And the second one is it is very convenient as well as rational group. So we can prepare convenient as well as rational groups depending upon their nature and types. And the next one is comparison will be easy. So from year to year as well as from one organization to another. Okay. Next concept, types or methods of financial analysis. So there are basically two important methods to prepare, or which are two important methods of financial analysis. So financial analysis is an art. As such, there are various approaches towards the financial analysis. So these are the two basic approaches of financial analysis. So the first one is horizontal analysis and the second one is vertical analysis. So very important, you are going to learn problems relating to horizontal analysis as well as vertical analysis, and a very important chapter for 12 marks. So 100% you will get a problem for 12 marks under this vertical as well as horizontal analysis. So we shall discuss it later, what are the type of problems you will get here. So if you see this chapter, so the basic weightage will be you can get a 1 mark question, a 2 marks question as well as a 12 marks question. So you don't have a 6 marks problem here under this chapter. Very important as well as very easy 12 marks problem. Next, let us see what are the objectives or purpose of financial analysis. So the first one is to measure the earning capacity or profitability of the business. So I have told you, so why this financial analysis is normally made? So we are going to group them into small groups and we are going to compare with one year to another year, or from one organization to another organization, or from one item or from one group to the other group of the similar or of the same balance sheet. So the first one is to measure the earning capacity or profitability of the business. So by knowing or by studying in detail the financial statement of a company, so we will exactly know what is the financial position of the business, or what is the profitability of the business. Suppose if you take 2 years, that is 2022 and 23, what is the profit in 2022 and what is the profit in 2023? If the profit is rupees 10 lakh in 2022, if the profit is 15 lakh in 2023. So this comparison can be easy. So you can compare what is the exact profitability. So in 2022 it was 10 lakh and in 2023 it is 15 lakh. So that we can easily tell that in 2023 the profit is more, 5 lakh profit is more. So to measure the earning capacity or profitability of the business. So through financial statement, we will come to know the exact profit or loss of the business. But through financial analysis, we are going to discuss in detail or study in detail what is the exact profit or what is the exact earning capacity of the business. Next one is to measure the solvency. So through financial analysis or studying in detail the financial statement, we'll come to know whether the company is in a position to repay the liability or not. So it may be short-term liability or long-term liability. What is the solvency ratio? So what is the condition of the company? So through the financial statement, we'll come to know what is the exact condition of the company. So whether the company is in a position to pay the outsiders liability, that may be short-term or long-term. That is solvency ratio. To measure the financial strength. So here also through analysis we'll come to know what is the exact financial position. So whether it is in a positive condition or is in a negative condition. So what is the financial strength? So whether the company will be able to manage in the market or not. So whether it is able to compete the competitors or not. What is the financial strength of the company? Next is to make a comparative study with other firms. So I have already told you, so whether the company is in a condition to sustain in the market or not, as well as you can compare the financial position with that of another firm who is producing the same kind of product. So, or with a similar nature, if the company is of similar nature to another company, then you can compare your financial result with that of another company. Next, to measure the capability of payment of the interest as well as dividend. Here for whom we are going to pay the interest? So we are going to pay for the debenture holders, and here also shareholders. So we are going to pay the dividend to the shareholders. Now being a company who have raised their funds by issuing shares and debentures, now whether the company is in a condition to repay the dividend as well as interest to the shareholders as well as debenture holders. So interest will be paid to the debenture holders, a dividend will be paid to the shareholders. Now whether the company is in a position to repay that or not. Okay, so that will come to know by analyzing the financial statement, by studying the financial statement. Next is to identify the trends of the business. So this I have told you. Suppose if you take this. So here the profitability trend have increased, correct? From 2022 to 2023, whether the profit have increased or not, what is the trend? Whether there is high in trend or low in trend. So whether the profitability have increased or decreased. So that trend can be done through trend analysis. And the next one is to judge the efficiency of the management. Of course, if the profitability of the company is very good, then of course we can tell that the management is very efficient, so where that it can minimize the cost and maximize the profit. Okay, so through analysis of financial statement, we'll come to know whether the management is efficient or not, or what is the reason for inefficiency in management. So that can be studied in detail. Next, to provide useful information to the management. Of course, by the main aim of the presentation of financial statement is to provide the information to the users. So here is the management is very important user of the organization or the business. So through financial analysis, we can provide useful information. So what is the variation in profit? Why in this particular year there is decrease in profit? What is the reason for that? Because we are going to study each and every aspect of the financial statement in detail, so that we'll come to know what is the exact condition of the business. So whether our current assets have to be improved or whether current liability is more or less. So each and every aspect is studied in detail so that we'll come to know useful, or we can communicate useful information to the management so that they can take necessary decisions to improve the management of the organization or managerial conditions of the organization, where a proper decisions can be taken and the organization or the profitability can be improved. So these are the objectives or purpose of financial analysis. Next one is uses of financial analysis. So let us see what are the uses of financial analysis. Now you know what is the meaning of financial analysis. So by seeing the objectives also, you would have got an idea what is this financial analysis, which means discussing or studying each and every aspect of the financial statement in detail so that a proper decisions can be taken, as well as there are a lot of other objectives to be followed. Okay, so let us see what are the uses of financial analysis for taking investment decisions. Yes, so by seeing the exact position of the financial statement of a company, so a management can decide whether we have to go for long-term investment or short-term investment, or whether we have to continue with our investment or stop our investment, whether the investment is yielding a better profit or not. So such type of decisions can be taken, that is investment decisions. So if the fund is more in the organization, of course we can go for long-term investment where it requires huge amount of money. So in the same way, if the fund is very less in the organization, then they can go for short-term investment. So that investment decisions can be taken because the financial statement are studied in detail. Each and every aspect tells us whether we have to invest in a particular aspect or not. Next, for taking credit decisions. So whether we have to give credit to the customers, so or whether we have to borrow credit from outsiders. So what is the condition? What is the exact condition of our organization? Whether we have to borrow from the outsiders or whether we are in a condition to give the credit worthiness to the customers. So such type of decisions can be taken by studying each and every aspect of financial statement. For taking dividend decisions, of course, to declare the dividend. So suppose if the organization is in huge profit, then the dividend will also be declared, will also be huge. So dividend which is given to the shareholders. So what is the ratio of dividend to be distributed to the shareholders? Because they are the real owners of the business. So if my organization is in a huge profit, then I can declare high rate of dividend to the shareholders. So depending upon the condition of the organization, dividend decisions can be taken. For estimating trends of the business, so based on the current year situation, based on the current year financial position of the business, so what would be the next year? So I can estimate. So what would be my current asset in the next year? So whether it might decrease or decrease depending upon the present condition of the business. So I can predict the future also. For taking various managerial decisions. So managerial decisions are very important in the organization depending upon the financial position of the business. So what are the changes I have to make in the managerial decisions? So what are the decisions I have to take so that I can earn more profit, so that my financial positions will be less? So what is the solvency of my company? So what are the decisions? What is the liquidity position of my company? So what is the profitability position of my company? So based on that, I can take a proper managerial decision so that I can get my management or I can get my business into a high level. So for taking a various managerial decision, this financial analysis is very important. Next is significance or importance of financial analysis. So let us see what are the significance here. Significance for the management. So this financial analysis helps for the management also to take a proper decisions. Significance for the investors. So by presenting the financial analysis or financial statement, even whether I can grab the investors. So what is my exact financial position, which has to be communicated to the investors so that I can increase my investment also, because investors plays a very important role, for which I have to present my financial statement to the investors so that they can get impressed and they will invest in my company. So significance for the investors. Significance for the creditors, whether my company is in a position to give credit or to borrow credit from the outsiders. So in which condition my business is. So significance for the creditors. Next, significance for the government. So to know the exact positions, what is my business contribution to the government, so the development of the economy. So for that reason also this analysis is very important. So even government wants to know on what basis, so in which sector if they give more importance, so it leads to development of the economy. So for that reason also this analysis is important. Significance for financial institutions. So financial institutions plays a very important role where they just not provide the finance to the company, along with that they provide various services to the company also. So what is the contribution of financial institutions in providing loans to the organization? So what is the rate of interest? So significance for financial institutions also, where the financial institution wants to know the liquidity, solvency as well as profitability of the business, and then they provide loan to the organization. Next, significance for the employees. Even employees also wants to know the financial statement, because so they also can predict what would be the bonus for me for this year. So what would be the salary, whether there will be any increment. So what are the other incentives that can be given to the employees based on the financial position of the business. That is significance for employees. The significance for stock exchange authorities, even the stock exchange also. So because the company will list its stock in the stock exchange. So they also wanted to know what is the exact financial position and how the analysis is done, where each and every aspect is studied in detail. Significance for taxation authority. So what is the exact tax has to be paid to the tax authorities. So excise duties. So all these are included here in the financial analysis. Significance for researchers. So there are many researchers who wanted to know about the position of the company. So what is the trend in the market? So what is the exact position in the market of a particular company? So for which this financial analysis is important. Significance for other parties. So other parties like your customers also wanted to know, your tax authorities also wanted to know, or how socially responsible the organization is for the society. So these are the other parties who wanted to know the financial statement, where if you study the financial statement in detail, so that you can know the exact position of the business. So these are the significance or importance of financial analysis. Next is limitations of financial analysis. So the first one is limitations of financial statements. So there are various limitations for financial statements also, because we tell that we record only the historical data. Okay, so this financial statement, so if there is any limitation in the financial statement, so it carries for analysis also, because once we prepare the financial statement, if anything is wrong in the financial statement, so it carries for analysis also. Your analysis also goes wrong. So exact financial statement will be prepared only when if you follow all the rules and regulations, but still there are a lot of limitations in the financial statement. Why? Because we are going to record the data which is historical in nature. We are not going to record the data which is currently, which is there at present. So we are recording historical data. Suppose if there is any mistake in the financial statement, it carries for analysis also. Your analysis of financial statement also goes wrong. Next, affected by window dressing. Yes, of course. So the exact result of the financial statement cannot be shown to the users in certain situations. So window dressing will also be there, where you are going to show the fair financial position of the business. So when you show a fair or fake financial position, of course your analysis also goes wrong. Your comparison cannot be done. Do not reflect changes in price level. So this I have already told you. Suppose if you take previous year as well as current year financial statement, and if you want to compare both, so your exact comparison cannot happen, because the price level keeps on fluctuating. In the previous it may be high or low when compared to the current year. So that exact price level will not be ascertained properly, so that your comparison will becomes difficult, where it affects based on changes in price level. Different accounting policies also. You can't compare your financial statement with another organization, because they might have followed some other method. For example, depreciation. So our organization might have followed straight line method. The other organization might have followed written down value method. So the methods are different, and your policy which you are calculated or which you have followed from your previous year to current year, if it changes, then your comparison cannot happen. It's because of accounting policies. If you don't follow the same method from one year to another year and from one organization to another organization, your analysis goes wrong. Effect on personal ability and bias of the analyst. Of course, this is also one of the limitation of the financial statement. Normally, we are going to draft a financial statement based on your personal decisions. So here, personal ability as well as bias on the side of analyst will also affect the analysis of financial statement. So personal judgment will also be there while preparing the financial statement, so that your personal judgment also affects the analysis. Difficulty in forecasting. So based on current year situation, it is difficult to forecast the future aspect also. It may be due to lot of changes. It may be due to price level or the changes in government policies, or your accounting policies might also change, so that forecasting will becomes difficult. Next, lack of qualitative techniques. So of course, in accounting we are going to record all the transaction which is measured in terms of money, which is quantitative in nature. But there are other aspects like resignation of an employee, recruitment of an employee, which are qualitative in nature, which will not be recorded in financial statement, as well as it will not carry for analysis of financial statement also. Limited use of single year's analysis of financial statement. So we can't compare single year's financial statement with one another perfectly. So normally we are going to compare with that of previous year, as well as that is 2 to 3 years comparison. So where exact analysis cannot be done due to lot of external forces which keeps on changing. Okay, so these are the limitations of financial analysis. Next, users of financial statement analysis. So they might ask you for 2 marks. So write any 2 users of financial statement analysis. Who wants to know about this financial statement analysis? Of course, your management wants to know about it. Owners, that is your shareholders, also wants to know. Trade creditors, lenders who have given you amount, who have given you fund to raise the capital. So they also wanted to know. Labor unions, economists, researchers, government agencies. So if they ask for 2 marks, write any 2 users of financial statement analysis. You can write any of the 2 here. Next, tools of analysis of financial statement. So this is very important. They'll ask you for 2 marks. Write any 2 tools of financial statement analysis. So there is a difference in the question. Write any 2 financial statement. Then your answer will be statement of profit and loss and balance sheet. Okay, so that will be the answer. If they ask tools of analysis of financial statement, then this will be your answer. Comparative statement, common size statement, trend analysis, accounting ratios, cash flow statement, fund flow statement, break-even point analysis. Now in this chapter, you are going to learn about this comparative statement and common size statement. Next chapter will be accounting ratios, and the last chapter will be cash flow statement. So what are the tools of financial statement analysis? So comparative statement, common size statement, trend analysis, accounting ratios, cash flow statement, fund flow statement, break-even point analysis. So they'll ask for 2 marks. Write any 2 tools of financial statement analysis. Then you have to write any 2 here. Or if they ask, write any 2 financial statement, then your first one will be statement of profit and loss, balance sheet. If you write 2, that is enough for 2 marks. So hope you are clear about tools as well as types of financial statement. Okay, so this is about your tools of financial statement analysis. So in my next class, we shall discuss on comparative statement. So I have told you in this chapter you are going to learn a very important problem for 12 marks, that is on comparative statement as well as common size statement. So in our next class we shall learn about comparative statement and 12 marks problem on comparative balance sheet. So you are going to learn about comparative statement where you have 2 statement of profit and loss, comparative statement of profit and loss and comparative balance sheet. So in next class we shall discuss about comparative balance sheet. In the next 3rd session we shall discuss comparative statement of profit and loss. Okay, so very easy problem for 12 marks children. So go through the problem and a very important question also. So he will get a question on comparative balance sheet or common size balance sheet. So time being we shall discuss only about comparative balance sheet in the next class. So hope you have understood today's session. See you all in my next session with a new topic. Till then, Take care. Thank you.